Hello, everybody, and welcome. I'm Bonnie Halper. I write the Startup One Stop newsletter, and we now have the Startup One Stop app, which I'll talk about later. I don't want to take out Lisa's time. I've been writing it since 2009, and we've been hosting these investor breakfasts every 2 weeks since then. We started them online, and I want to thank Joseph for hosting us. Joseph, tell us a little bit about you.
Thank you, Bonnie. Good to be here. Thanks, everyone, for joining. Bonnie and I met a couple of years back and been running these events ever since in various ways and different companies. And venues, yeah. So I am a startup guy. I've been working in the startup space for a dozen plus years at this point, helping early stage companies grow and bring their products and services to market. So marketing is my thing, and happy to chat about that with anyone at any time. Just a scheduling note, I may drop off early. But I'll make sure.
See what my.
Oh, if you're not speaking, Rick, would you please mute yourself?
Yeah.
Thank you. And Lisa's our guest today. Thank you. Lisa's such a busy lady. I'm so glad you made the time for us. She's giving up one of her scheduled meetings to be with us. So thank you. So Lisa, would you like to introduce yourself first, or do you want to go around the room to see who's in the room? Just so you know, well, we can have everybody introduce themselves afterwards.
First of all, thank you so much for having me today. It's an honor to be asked, and I look forward to meeting everyone. I'm truly sick of myself, so why don't we start with everyone else, and then we'll get back to me.
Okay, so next up on my list is Steve Schreiber.
Good morning, everyone. Steve Schreiber. I'm a business operations expert, 30 years plus of management in business operations. And I basically advise small to medium-sized service companies in handling and addressing customer impacting operational issues.
Oh, thank you. And if people want to put their contact information in the chat, that's always good too. And we do try to keep the intro short. Abduli, do you want to introduce yourself? You're muted. Oh, there you go. You're muted at the moment. Okay, we'll go to Albert, who's also muted at the moment. And don't be shy. This is a very friendly room, and we'd like to know who's in the room and what you're up to.
Hi, everyone. This is Albert Miller. I'm principal at Milton EQ and emerging fund manager. I have a background in engineering and technology development.
Oh, thank you. Ian, always good to see you, Ian.
Yeah, nice to see you as well. So Ian Garmez with the Virtual Film School based in Toronto. We help influencers make great videos.
Oh, thank you. I think it's a Jay. I don't have it, but who's muted right now? Jay, do you want to introduce yourself? Well, I know that Joe Milam's not shy. He's going to introduce himself.
Joe Milam here in Austin, Texas. We built a platform to bring public market investment process rigor to how we fund startups to try and get out of the pitch fest industrial complex and more towards treating it like an asset class and risk management and portfolio theory and all that sort of boring financial stuff that the venture industry has sorely been lacking. So,
and we thank you for that. I hate if I butcher your name. Malgorzata. You're muted right now, but if you'd like to introduce yourself.
Good morning, everyone. My name is Małgorzata. I'm the founder and CEO of Gosia Genomics. We are a personalized genetics platform for prevention of chronic and mental health diseases. I'm board certified genetist practicing in clinical genetics and personalized medicine over 20 years. I started my early career focusing on breast cancer treatment, personalization, and I'm happy to see how our set of mind in practicing medicine progressed to the point where we are right now. We are not there yet, but that's what I'm trying to change with my company. So pleasure to meet everyone and pleasure to meet you, Lisa, and I'm looking forward to the conversation.
And we thank you for what you're doing. Puck.
Bonnie, thank you. Hi, everyone. Hi, Lisa. First time to the group. Ian, thank you for the invitation. I'm an entrepreneur in the Boston ecosystem. part of a lot of groups up there. We're bringing to market a mirror, our first product that goes on all the strollers to keep parents face-to-face connected with their kids during the most important part of that development for the kid, and then creating a marketplace around that. And so happy to connect with anyone in the group. And I'll put my contact information in the chat.
Okay, thank you. Raquel.
Hi, good morning. My name is Raquel de la Vandera. I'm a founder of ALTOUR. We're building consumer SaaS lifestyle application to help the busiest moms manage the chaos in their schedules.
Thank you. Samuel, and welcome again.
Hi, thank you, Bonnie. My name is Samuel. I'm community manager. I help Bonnie manage the community Tag5 Ventures community at Tag5. It's a pleasure to be here. Thank you.
And I thank you. Tom, welcome back.
Thanks. My name is Tom Koch. I am a data scientist. After doing academic research, I co-founded the company. Last year, we got acquired, and now I work in the insurance industry, improving business outcomes. And other than that, I consult other startups in the biomedical domain and pharma about leveraging data science.
And Wilma, always good to see you, Wilma.
Hi, Bonnie. Thanks for having me. My name is Wilma, and I think you can see on my screen it says Dark Beauty Healing. I started a nonprofit mental health organization at the beginning of the pandemic to deliver free mental health care to people of color. And during that time, I discovered that it was very difficult to continually raise money. It was an area that I fell into by accident. And so I'm in the process of creating a beauty product that not really speaking publicly about yet, but is going to hopefully allow us to donate a portion of the proceeds of the revenue, or the profits rather, to Dark Beauty Healing. And yeah, that's me.
Oh, thank you. Lisa, I'm sorry. Now it's your turn. We want to hear all about you.
It's no problem. But just before I start, Wilma, I want to hear more. And if you're not familiar with a group called The Level, you should be.
Okay, I will. Yeah, absolutely. I'll put my details in the chat.
Yeah, it's a group of powerhouse women of color, successful people who cobble together syndicates to invest in companies, early stage women of color founded. So you should know them. Okay, so hi everybody. I'm Lisa Morris. I'm happy to join today. I wear many hats, but I will try to briefly walk you through my personal story. So I started out as a Broadway actor, which I guess is not typical for most investors. I toured the country for 14, 15 years with various Broadway musicals. While I was on tour, I thought our travel was handled poorly. So I started what I thought at the time would be a side hustle, booking travel for other touring entertainers. I realized pretty quickly I'd actually tapped into a niche market in the travel industry that wasn't being serviced well. So I quit acting and I focused on growing the company. I grew the company for about 5.5, almost 6 years, and then I started getting acquisition offers. The funny thing for me is, having not gone to business school, never planning on being an entrepreneur or running a business, the first person to approach me about acquisition who asked me what my EBITDA was, I had no idea what they were talking about. I thought it was some sort of personal body part. I thought it was like some filthy guy. I'm like, my what? I had to research it. Then I realized it was a fully appropriate question. Ended up learning a lot about M&A during that time because I had 5 different companies all trying to acquire my company. I ended up selling it to a company called ALTOUR. I continue to run my old travel business as a division of ALTOUR, but I took the money off the table when I sold, and that's when I started investing. So I invest my own funds. I do not raise capital from other people. I am not a fund manager. I do not advise people on capital, but I've been a very active angel investor in the impact space for the last decade or so. What else would you like to know about me? I have current roles in addition to running my travel company. I work with Force Family Office and I run philanthropy for them. I run a program called Force for Good, which you can see behind me. We feature a different nonprofit each month, try to get our community of family offices and investors and high net worths to learn about what the nonprofits are doing to see if there's ways that they can collaborate on issues that they care about. I recently took on a consulting role with the Dunhill family office, Dunhill Ventures. They do investor roadshows throughout the world. They're based out of the UK, but they focus a lot on roadshows in Dubai, Singapore, Hong Kong, and the UK. And then I'm going to be helping them here in the United States, primarily New York, Miami, Boston, in curating great investors to come to the table and helping to host. I also am a pitch coach. So I work with a program called NYSERDA, New York State Energy Research Development, which is through Columbia University. I work with clean tech entrepreneurs, and they get 3 sessions with me before they go out into the world to help them learn how to position their company and how to pitch. I am also a pitch for hire. So for example, a publicly traded company in China uses me as their US spokesperson because of the language barrier. You need somebody that can communicate with your investors on what you're doing. And they were having, let's say, some issues communicating via Zoom with their accents and being a highly technical company. I consult for nonprofit organizations. Currently, I'm with Mary Tyler Moore's foundation. And as of yesterday, I joined the board of Vital Options, which is an amazing nonprofit that helps patients, advocacy, information, and grant making to help them when they're going through terrible illness. What else do I do? And like I said, I'm a pretty active investor. My focus as an investor is primarily on pre-seed through Series A, social impact businesses with a preference for female or underserved founders. So I've just said a lot of words.
When do you sleep?
I do not sleep very often. Before some people signed on, I was explaining that basically I run on Dunkin'. I fill my mug 14 times now. It's 12 times a day. I have 12 of these a day full of Dunkin' Donuts, French vanilla. I will probably have diabetes very soon. I work from 4 a.m. to 11 p.m. every day. It is unhealthy. It is terrible. I do not advise it for anyone, but I do it because I have a difficult time saying no to good opportunities. Bit of a workaholic.
And we appreciate that. What size check do you typically write?
It depends on the stage of the company. Anywhere from 25,000 to 250 is typically where I sit. I would say the majority of my checks are in the 25-50K range. Because the majority of the companies are in the seed stage. If it's a fund, obviously I have to go to 250. That's typically the minimum for most funds. In general, I'm not a fund investor. I prefer to pick my own deals. That to me is the whole reason I'm investing. But in certain areas, for example, blockchain, I did want to have exposure to blockchain. It's very apparent that that's the future. I cannot pick a blockchain deal. I don't have enough experience. So in that area, I chose to invest in a fund. But most of the time, I choose to avoid funds. I will work with funds that want to have, SPV opportunities within their fund for a specific portfolio company. There's a great fund called Good Light Capital. It's African-American male-led fund, really focused on impactful and underserved founders. He will let me in on specific deals. One of the things his fund does that I love is they let the investors help them diligence companies before they accept them into the portfolio. So we all have an opportunity to see and weigh in on the companies they're considering making investments into. And so typically if I am on the diligence call, I might say to him, listen, I'd like to go into this one. And if there's room, he'll let me go in specifically to one company within the fund, but I don't go into the general fund.
So questions from anybody in the room. This is your forum too, so please feel free.
I feel worried about you, Lisa.
I know. All that coffee and no sleep.
I just want to come and help you get some sleep.
Yeah, it is challenging. I'm also, I don't have children. I think if I had children, there'd just be no way that I could do it. But I do have the world's most spoiled sausage dog. And it's funny how often I have trouble attending conferences or doing business because I can't find someone to watch the dog for me. That's actually an ongoing challenge. these are the things you have to think about. If you don't have a family, you can't just leave and have, tell your kid to walk the dog, right? Somebody's got to do it. Even also just watching the house. I have a couple of, this makes me sound terrible. I have a few residences, but I do have a few residences. And so
it doesn't make you sound terrible.
It sounds a little,
no, not at all. It sounds successful. No, that's good.
But so sometimes I do have to figure out, if I'm not going to be back to one of the houses for a while, can somebody go in and just turn the car over, make sure the engine's not going to go bad, or just, make sure that everything's working properly heat wise and pipes are not going to freeze. So I do have to have sort of an army of people. And I will say there were a lot of losses for everybody during COVID. Certainly my business got hit enormously. But one of the things that has been an ongoing loss for me was the loss of my personal assistant, who I used to call my work wife, or my paid 1950s housewife. The best things I did for myself as a businesswoman. I don't need an executive assistant to run my calendar for me. I'm perfectly capable of managing a calendar. And I don't need someone to book reservations for me for dinner. I can do that too. What I did need was someone to be my essentially housewife, to do the cooking, the shopping, the laundry, all of that, because I have no time for it. And I had the world's best work wife. But during the pandemic, because I wasn't actually very busy, I didn't need her services for a while. And then I'm proud of her. She started a business with my help, and she's killing it, but now she has no time to help me. So I helped a fellow female entrepreneur, but I hurt myself because I need a work wife. I need a 1950s housewife that will keep the dinner warm. I can't cook. I can do many things. I can't cook at all. I mean, I can't, when I'm talking can't cook, I mean, legendarily terrible. I managed to screw up instant hot cocoa, which is pouring hot water into powder. I really don't understand how you can mess that up. I did.
But she smokes cigars.
I do smoke cigars.
Wow.
I am basically traditionally, if you want to go into traditional gender roles, which I know nowadays is not kosher, but if you're going to go into traditional gender roles, I am basically a dude in a woman's body. I love cigars. I love gentlemen's clubs. I love whiskey. I hate shopping. I hate cooking. I hate fashion. I'm basically a guy. I love golf. Like I'm legitimately a traditional Mad Men guy.
There's a wonderful cigar bar, a couple of them, but Club Macanudo, do you know Club
Macanudo? I love Club Macanudo.
We got married at Club Macanudo because my husband said, when we get married, I want to have a drink and a cigar. So I said that narrows down the number of places. So we're members. So we got married at Club Macanudo. It's a beautiful little place.
Yeah, I started going there because Havana Room was closed down. I don't know, and so I used to have all these friends that I legitimately was friends with to use them for their Havana Club memberships. Every time they wanted to get together, they're like, "You want to have dinner?" I'm like, "Let's have cigars." And finally, one of my friends who was a member said, "Do you actually like me or just the cigars?" I said, "Well, it's a combination. I enjoy smoking cigars with you, but yeah, I probably wouldn't just give you 2 hours of my life without the cigar."
Right.
Terrible. It's terrible, but true.
What kind of companies do you look to invest in at that sort of seed level?
So for me, it has to have obviously it has to have a strong founder. That's true for any company you're going to invest in. I think people that invest in a concept without investing in the founder at that stage are making a huge mistake, because the reality is at that stage, all of the numbers that you're going to see are projections and they're all made up. I've never seen anyone's deck show me a downward trend. It's always like, well, right now we have 50,000 in revenue, but by next year we're going to be at 50 million. It's always ridiculous. So for me, it's very much about finding winning founders. And I have a really good ability to recognize entrepreneurial talent, but they can't just be a good founder, because you could be a fantastic founder, but of a company I would never invest in. I cannot invest in biotech, life science, pharma, because I can't diligence it. So it could be the greatest potential cancer drug in the planet, but I'm not a scientist. I don't have the expertise. I'm not going to know. Same thing with deep tech or frontier tech. you can make a fortune in that category. I'm not saying you shouldn't invest in robotics and I mean, it's a huge market. I'm not going to write a check in that space because I don't understand it. I have no interest in the NFT, crypto, coin, security. Just as soon as someone says the word NFT, my eyes glaze over and I start wanting to go to sleep immediately. Not for me. I'm not a social media person. It's just not interesting. So what is interesting to me is high social impact. Now that can have a lot of different applications. So I'll give a couple of examples of recent companies that I invested in. One of them is I'm really passionate about right now, called Box Media. It's a future of work ed tech. So she uses her media background, gamification theory to create really immersive, innovative content for people looking to upskill their job force. So she does B2B work, but she allows companies to really re-educate their job force so that they can move up the chain. They can get better jobs, they can get higher wages, and they can retain talent, which overall helps everybody. And once there's a certain, let's say, profitability reached, the plan is to offer the coursework free for incarcerated people so that they can start to really get the job skills they're going to need because they face an even steeper challenge getting work, right? It's so difficult if you have a record to get hired. And so if you can come out of prison with an advanced skill, it will vastly increase your ability to work and to get hired and to show that you took the initiative to complete that type of coursework. I think a potential employer will hopefully recognize that. And so that's the type of thing. I invested in a technology that connects gig economy and freelancers and small businesses to health and wellness benefits, employee perks, essentially, that normally would only come through a large company. So it helps to equalize people's access. I invested in a company that was designed to teach kids the value of a credit score. A lot of kids that come out of lower income households, their parents didn't know what they were doing with credit scores, and it's affected them and their ability to do a lot their whole lives, but they're also not necessarily the people to teach their kids. So this is a gamified app where teachers, parents can reward kids for doing things and also take it away. And so it kind of shows how a credit score works and how, being responsible works. So that's
Can you use that with adult children?
Yeah, I was going to say.
Well, I'm sure it could. And again, that's founded by an African-American founder. Both of the other companies I mentioned were female founders. So will I invest in a white male? Of course. I'm not a racist against white men, but I try to deploy capital to the people that are not receiving capital. And when you look at the statistics, especially in venture, of who's funded, it's the women and the minorities that are getting like 2 to 3% of the whole market. So yes, if I'm going to pick between two education companies, I'm going to focus on the female founder first. That being said, another example of a company I invested in is a white male founder, but his business, it's called Bidversity, is designed to help women and minority-owned businesses get government contracts. So the founder is white, but the people he's helping are not. And so those are the types of companies that I look for. And then I also invest in theater, which I consider to be a highly impactful social investment. It doesn't fit under your traditional thought about ESG. Most people are thinking about, solar and renewables. But if you invest in theater, theater tells a story. When you tell a story, you're changing hearts and minds. You're, inspiring the next generation of artists. You're changing people's mindsets. I produced a show called The Prom. It was financially not successful. I mean, not successful. However, we got letters to the show from kids saying, I was planning on committing suicide, and because of your show, I'm not going to. I feel seen. I feel included. And I don't know how you can measure that return on impact. I call it ROH, right? Return on heartbeats. I have no idea what that kid is going to do in life, but I know that we help prolong that child's life just by producing the piece of art. We also had letters from parents saying, until I saw your show, I didn't realize what I was doing to my child. I didn't see it that way. I saw it as because our show was about two high school lesbians who wanted to go to the prom together in small town Indiana. And it was based on a true story that happened in Mississippi, where a lesbian couple wanted to go, and so the town canceled the prom. And so that's what inspired the whole play to be written. We set it in Indiana just because it was actually kind of funnier, especially because Pence was the VP at the time. It had a whole reason for it. But you know, part of the show was, you know, one of the lesbians' moms was like the PTA mom, super active, super conservative, and she loved her daughter, but she saw a hard life ahead for her daughter if her daughter was gay. And so she did everything she could to stop the prom from happening, to stop her daughter from being who she was. And we had parents writing into the show afterwards, like, I realized I was that mom. You know, I was the mom thinking I'm protecting my child from trying to stop them from this, but I'm actually breaking my child's heart, and your show changed my mind. So I look at theater like that. You know, there's other examples of shows where if you see a great piece of theater, I mean, I can't even tell you, I think half of our Congress learned their own history from watching Hamilton. I'm not kidding. I would actually take a poll, especially of our current House of Representatives. I think most of them have never taken a civics class. And so shows like Hamilton actually educate people. And so theater to me is an impactful investment. I do some climate investing. I did a waste to energy investment. I think that's very important. I have done some water purification investments. So I don't have one particular sector. I have the ones I won't do. I will not do fashion. I will not do jewelry. And this is another interesting thing on the misogyny bandwagon. I find it fascinating that I have not a single portfolio company in any realm of beauty or fashion or makeup. And yet I get sent all the time, I thought you'd be interested in this investment that's a handbag. And I think to myself, no, why is it that you think I would be interested in a handbag company when I have never invested in luxury goods or fashion accessories or even consumer goods? What exactly made you think, you know who I should reach out to for investment on this? Lisa Morris. It's because I'm a woman.
Yep.
And I'm like, how come you never think of me for that incredibly lucrative opportunity that you're sending to your guy friends from Stanford? You never send me those. You send me the ones that you're like, I don't know anything about this. Let me send it to the female investors I know. So it's interesting. I don't think it's intentional. No one's meaning to be misogynistic. It's just that's when they think of you.
When you said you invest in strong founders, what does that mean?
Okay, well, every founder has hopefully a passion for what they're doing. But when I meet a founder and all they can talk about is how quickly they're going to get out of running their business, I'm immediately not very interested. I call them flipper founders. You know, you're not interested in growing a company. You're interested in making a quick buck, and I'm the one who's going to help you to get there. And you might make that quick buck for me too, but chances are you won't, because you are selfishly just trying to advance your own finances with my money, and you don't have a passion for your own business. So that's one thing I look out for. A great founder cannot be so stubborn they're unwilling to take feedback or see different perspectives. You know, a lot of founders have the idea that, you know, my way or highway, I know everything. As soon as somebody tells me they know everything, I know they know nothing, because nobody knows everything. So I look for a founder that says, I'm really strong in 80% of this, and here's how I'm going to solve for what I'm not strong with. You know, for me with my company, I'm really good at sales. I'm really good at business development. I'm really good at negotiation. I am borderline learning disabled with numbers and Excel and books. So I didn't try to become a CFO. I hired people that know how to use QuickBooks and deal with money and look at indicators. I wasn't going to try to become an expert in what I'm not an expert in. I was going to hire someone that was an expert, because you can't know everything. And I think a good founder recognizes their own weaknesses and is not afraid to mention it. One of the founders from this Vox Media company, one of the things she said on her pitch that blew me away, is I always ask a founder or who's looking for money, what do you see as the biggest challenge to your business? Or, and she said before she, usually it's access to capital. That's usually the answer. Or, there might be some other regulatory thing, a hurdle that they might have to get through. But she said, the mental health of my team, because if they're not strong, we're not going to make it. And that, I immediately loved her. I immediately thought, okay, you're somebody that recognizes what it takes to actually build a business. And part of building a business is having loyal, hardworking, dedicated employees that are not looking to get a title and go, and that are not dead weight, but that are going to be your partners, even though they don't have a partnership stake. And recognizing how to treat people, to me, is one of the, my employees from my company have all stayed with me, except for the few I had to unfortunately let go during COVID. But I haven't lost an employee. And that's because I treat them, I treat them right. And I think that that's a really important sign for me and a founder. There also has to be a fire and a passion. Some people are not founders, they're operators. And that's okay. In fact, every good business should have a solid operator. But you're not the one that's going to grow the company. You're the one that's going to run the company. So if you're that person, if you're the detail person, if you're the solid, even-keeled, operational, steady Eddie, that's fantastic. You're very essential to a business. But you're not the founder. You are, but you're not the one to grow it. You're not the one who's going to scale that business. You're the one that's going to help the business keep up with the growth. So I want someone to recognize that and say, look, I have a good idea. This is particularly true with, I would say, some tech people, because they're brilliant scientists or they're brilliant technicians, and they know a lot about what they do, the engineers, but they're not entrepreneurs, right? They have another talent. Same thing with designers, right? If you were going to get into fashion or things like that, there are talented designers that are not the person to scale the business. So they need to hire that person. So for me, a founder has to have that burning passion for their business. They have to know their why. I know it's a very trite thing. Everybody's heard these books, know your why, but you have to know your why. Like you said, you're going to start a business, and your why is your business is essentially a revenue generating tool to help the nonprofit cause you care about, right? It's not that you care so much about whatever the business is. You're using it as a way to get to what you actually care about.
And I do care about the business too.
Sure, but what I'm saying,
actually, it fits in very well with what I'm doing.
That's fantastic. I'm simply saying to know the why, to know why is your business relevant? Why is it needed in the world? Why am I somebody that should invest in it? Sometimes you have a good business, but it's not an investable business. It's not going to work for outside capital. You could have a nice, strong kind of mom and pop business that's going to do well, but there's no exit. So there also has to be some sort of strategy. Or if you're not planning on exiting the business, if it's like, hey, you know what, we're going to be a cash distributing business. We're going to be successful. We're going to pay you back in distributions, and you're just going to be part of our journey. And we plan to be a long-term operating business. That's fine. But you have to know and have a plan. I have to understand how I'm going to get paid back. If you can't answer that for me, then it's charity, it's not investment. Another thing for me with a founder is a clear plan for how to handle the challenges they know are there, because every business is going to have market challenges. It's impossible not to, unless you're truly coming up with something that has never, ever been done before. But think about almost any business. So let's say you are a medical device. You know that you're going to have to get certain biomarkers. You're going to have to get certain information before you can get clearances from the FDA to ever go to market. So you have to come up with, this is our plan to execute on that. This is how much we're going to need realistically. This is what we're going to do with the capital. I can't invest in your idea. I have to know your plan. And a good founder has thought through their plan. There were a couple of businesses I was going to start because I thought I had a great idea. And then I sat down to write my business plan. And step 4, I went, oh, this is why it's not going to work. And I didn't start the business because I realized when I was doing the plan where it was going to fall apart. So to me, a good founder is realistic, they're honest, they're authentic, they have a passion for what they do, they know why they're doing it, they know what the market overview is, they know what the overall potential is in the market, they know how they're going to break forward, and they let me know how I can help them in that journey. And they have to inspire me to want to, because there's a million things I could invest in. And there's a lot of things I can invest in that are way safer than an early stage venture. Let's be honest. I mean, I'm taking a pretty high risk with most of that capital. I could put the same amount of money into some really safe, traditional publicly listed equity and make more money. So I'm investing primarily like philanthropy with a chance of return. I'm investing in things I want to see happen in the world. And I'm investing in companies typically as well, where I think I can help them. So I have seen some fantastic founders with fantastic companies, and I will introduce them to other people that I think are the right investors for them. But if all I am is a passive check and I have no way to help them grow their business, I usually don't invest. And that's simply because I want to feel, maybe these are my own control issues, they might be, but I want to feel like I'm going to have a chance at helping them scale. And if I feel like I'm not, then, for $25,000, $50,000, it's not going to move the needle for anyone. So if I can't do more, if I don't have the relationships, like I've seen a lot of consumer products that are great, but that's not my space. I'm not going to be able to help them navigate that. I don't have the right relationships with retail. So I'm not going to invest in it because I'm not the right strategic. I think investors at a very early stage should be strategic on a cap table, not just checks.
Thank you for that.
Long-winded answer, I know.
No, not at all, not at all. Thank you. And just to say, I just have to hop off because I've got another call, but this was really fascinating and I would love to connect with you.
I'll
So
drop
I'd love
LinkedIn in the chat box when I'm
Okay,
not.
brilliant.
You too. Not a
Thank
problem.
you. Thanks, Bonnie.
Lisa, how do you do the due diligence on the ones you decide to look into?
Well, I'm not going to lie to you. I'm not very great at that. I do a lot of gut instinct, to be honest with you. I mean, there's certain things you can look up because, again, at this stage, the numbers are made up. So what I will do in terms of diligence is I will research the background of the person to see if there's any red flags in their personal history or anyone on their team. I will research the overall market, to see if the information they're giving me is in line. I usually I have a very large network of family offices and private equity firms and venture capital firms that are my friends. And I will ask favors. I will say, listen, will you look at this for me? You've done a lot in this space. What red flags do you see? Do you see anything? And I've actually been stopped from a few investments that I was going to make by a friend that went, aha, right here, this is where your problem is. This is wrong. Or this. And so I actually do rely on a lot of support from far more experienced investors than myself in terms of looking for real red flags. But I probably am not as cautious as I should be in the diligence process. That is an area where I would say I'm weak. I do a lot on gut instinct of the founder. And I'm happy to say that the majority of the time when I've bet on a founder I believe in, they've done really well. Most of the time where I've lost money, it's been when I've tried to be intellectual about it or get pushed into it by someone else. So I lost a fortune in an AI company because early on I had a friend pushing it on me. He said he was all in. He's like, this is can't lose. Lisa, you're going to regret it. We're closing in a week. Rushed me into it. I didn't know anything about AI. I have no passion for AI. I didn't speak to the founder. I kind of trusted my friend. I wrote the check. Turned out my friend was a broker. Got paid on my check, never put a dime of his own money in that he was all in on. And I lost the entire investment. It went to zero. That was a life lesson. And that part of why I don't invest if I don't talk to the founder. I'm not going to invest anymore because friends of mine say it's good. That being said, there are a few family offices that I'm close to that have extensive diligence processes, and sometimes they'll let me throw a tiny check into their larger allocation. and I will rely on their diligence and expertise, simply feeling like, they're smarter than I am. Now, having said that, twice when I did that, I lost.
Oh.
The biggest one being a private credit fund, family office I'm very close to, multi-billion-dollar family, had 20+ million in the fund, had been in the fund for over 5 years, was like, Lisa, you're sitting on too much cash. Don't, move it into this. It has 60-day liquidity. It's going to return, 7-8% very consistently. And I thought, okay, moved a bunch of money in there, followed him in. SEC investigation for fraud. It's still locked up. I'll probably never see that money again, or it'll be pennies on the dollar. And that was far more, that was millions that I put in. That's way more than I normally would do, because I was basically replacing my cash savings with that, because I was told I was an idiot making 1% in a bank account. So he didn't do it deliberately. He lost a lot more than I did. But that was, again, a thing where I would not have gone into a private credit fund. That wouldn't have been in my passion space, in my expertise space. I followed someone I thought was smarter than me. Turned out he wasn't.
Happens, yeah. But the other thing, you mentioned that you will not invest in blockchain. You will not invest in NFT, but you will invest in blockchain projects. Like, why the distinction there? I mean, they seem to be closely related.
There is a big distinction.
Yeah, the fund that I invested in does certainly have NFT exposure. But what I was saying is, when people personally pitch me, they're all passionate about their NFT. We're developing this and they're excited about it. But I'm like, I'm not excited about it. I think NFTs are, for me personally, I don't mean it as an investment class for other people, but for me personally, I literally have no interest. I don't understand why anybody would spend money to have a digital copy of, it's the same thing with fine art. I would never spend millions on a painting. That doesn't mean it's not a great investment class, a great investment, a solid thing. I mean, there's room for everybody, but it's where your own passion is. I think it's stupid personally, so I don't want to put money into it. I don't see the value in the world. I don't see what it does. I don't see how it helps anybody. And people are saying, oh, well, it helps the influencer because, now their jacket that they wore in this Super Bowl is more money for that. It's just not my thing. Blockchain is a technology that cannot be denied. It is the underlying technology of so much of what the world is being built on. So to ignore that, I think, is foolish as an investor. But to distinguish for myself between a good blockchain company or, what's more crypto and what's more blockchain, or all of these sort of, vague, I don't want to become an expert in it. The same way I said a founder should know what they're weak at, I think an investor should as well. I'm not going to do the kind of work and research and education to really understand the difference enough to write a small check. So in that case, I said, I'm going to go with a fund that I trust the managers on, and I'm going to trust them to make me money in this space. And I'm going to set it and forget it. And it's just not going to be where I put my energy. But I hope that helps to explain.
No, that's really clear. Thanks.
Lisa, I have a question. When you review someone's pitch deck, what is the most important thing that you are looking to find in that specific pitch deck?
What do you do? Why is it needed? How do I get my money back?
Hi, Lisa. Super insightful. Just I've been to a lot of things, and that was really great. Quick question. I'm in Boston. The flavor of the week right now is med tech. And so we got all these med tech. I'm part of this review group. You touched on it a little bit. When you look at med tech companies, what are, besides their understanding of the regulation, is there any other tidbits you can give me on things to look out for?
I mean, honestly, for me with medtech, I send it to my friends who are investors in the medtech and biotech space because it's not my area. But what I look for is, do I see a large market for it? Right? Is it, is it very niche, or is it something that I think has a lot of applicability? Who's behind it? Does the team behind it have relationships already in the space? Have they successfully executed before in that space and in bringing something to market? What's the viability in my mind for someone else to get there faster to market? What else exists that competes with it? Those are the things I would look for in a med tech. And And then of course, there's also, that's medical device, right? There's also, some people would call med tech digital health stuff, which is very different, right? Then you're going to look at the telehealth platforms and where the competition is there, the mental health platforms, the digitization of records. And again, I think a lot of times in that space, because I don't know it well enough, I am looking at the prior experience of the team. And that's not necessarily fair because everybody has to start somewhere. And there might be their first product or their first technology is genius and they just need funding and they don't have the track record. It's the same thing with funds, right? You look at a fund's track record. Well, everybody has to have fund one. And so it's really hard when it's your first time fund to get the money because you don't have a track record. So, it's a chicken egg thing. But for me, because I don't know the space well enough, I turn to, there's a lot, especially in Boston, you mentioned, right? You've got MIT, you've got all of these organizations that have a lot of expertise when it comes to that space. And so if I was genuinely interested in a med tech investment where it just hit me in the heart and I thought this is really important, let's say it's in femtech, right? Which is again, something that's sent to me quite a lot, being a female investor. They're like, you're going to care about this, fertilization thing. I'm like, actually, I don't have kids for a reason, but I get that other women want them. So, what I would do in that case, if I'm genuinely interested in, is I go out to my network. I probably have 200-300 people that invest actively in that space, which I happen to know about from my work at Force Family Office, because Force has a database. Because Force is essentially making introductions to the companies that hire them to family offices and funds and high net worths and endowments and all of that. There's a database where we actually can tag who invests in what specifically. And so I will then look through that and figure out who I actually personally know. I'm not going to reach out to people in the database if it's not their client, but I might say, oh, you know what? Peter is my friend. And I now know that Peter's invested in 4 med techs. So I'm just going to call him and say, hey, Peter, will you look at this with me? Yeah.
Great. Thank you.
Sure. I wanted to say something. Since I do work with founders and I help them out with their pitch decks, and I know that every single founder treats an investor pitch deck as if the investor is buying their product rather than buying into the company. I'm sure you see this a lot. Would you comment on that?
Yeah, I think a lot of founders get too caught up in their technology or their product and not enough in looking at it through the eyes of an investor. I don't have to understand everything about the urinary tract. Doctors, particularly PhDs, are the worst at this. They give you these decks that, you might as well be reading a science class, and they never get to the point. Who needs it? Who's going to buy it? How do I make my money? So I think a lot of founders miss, to me, the important part of the story. Why me? First of all, it's what's the problem I'm solving? What's the problem that whatever I'm doing, whatever I'm launching, what does it solve, right? Because companies that do well are solving a problem for people, right? Uber solved a problem, which was, the way that you get transportation. And they made it better and they made it easier. Now, it's not better for taxi drivers. That's a whole other conversation, but they tapped into a need that people had and they built a better mousetrap. So the first thing I look at in a deck is what's the overall issue in the world that they're solving? Then why are they the company that's equipped to solve it? Then how do I get paid back if indeed they solve it? If those 3 things are not in their deck, oh, and by the way, how much are you raising and what are the terms? A lot of people just leave that out entirely. I'm just supposed to guess how much money they need and what the structure is. I find that fascinating. Oh, great. You want me to give you money for this. How much money? What's the valuation? And if you don't have a valuation yet, that's fine, because a lot of times an early stage company, you're really not going to have it yet. You can be honest about that, but there has to then be, a plan. One of the companies that I invested in turned out to actually, it was doing great. And then during the pandemic, unfortunately, Broadway shut down. And so they shut down and they didn't have the runway. So they ended up failing, but they were doing great up until then. But the reason I invested in their company is when they had their acquisition target, the two companies that they mentioned as their, most likely to be the ones that will take them to an exit. One of the companies was owned by one of my best friends. The other company was owned by my former lover, both of which I could call at any time and get that company a meeting with. Doesn't mean they're going to buy the company, but I knew if they did what they said they were going to do, I could help them get to that exit really quickly. And so that's why I invested. Now, unfortunately, they weren't able to do what they said they were going to do because of the Broadway shutdown, but that's life. That was a black swan event that most founders could never anticipate. So it wasn't their fault. But they had a clear plan. It was like, you can't just say to me, I have a tech product, Google's going to buy it. Really? Because Google has sent every single tech product on the planet. So you got to give me more than that. I hope that was helpful. But those are the things for me. If the deck doesn't clearly explain what the solution is, what the problem is, what the solution is, and why they're the ones to solve it, I have no interest.
Thank you. We have two latecomers, and I'd like to give them the opportunity to introduce themselves. Rachel? Fierman?
Hi, I'm Rachel Fierman. I'm a graphic designer, and I work with tech startups primarily. It's nice to meet you, and it's been really interesting. Thank you.
Oh, thank you. And Ghislaine Arsenault. You're muted right now, but do you want to introduce yourself? No, I guess not. So back to question. Oh, you have a question. Go ahead.
Sorry, I do. You mentioned that female founders get 2 to 3% kind of what male founders get. And I was wondering what you think the kind of structural solution to that is. Obviously, you're investing in women and there's other women investing in women, but do you think that's going to go the distance?
Yeah, it's 2.3 is the actual number, and it used to be 2.7.
Yeah, it's going down instead of up.
Yep.
Look, I wish I had this solution because it's absolutely beyond frustrating. The numbers have been out there for years. It's talked about nonstop, but it doesn't change. And I think the only way it actually changes, there are many women with resources who don't invest. And I think a big reason why they don't invest is they're not confident that they understand investment. They don't understand how it works. They don't want to lose their money, and they're not confident. So I think part of the solution is discreet, because nobody wants to admit they don't know things either publicly, particularly if they have a lot of assets. So discreet ways to teach financial literacy and investing to women where they're more comfortable deploying capital. So I think that's one area. I think funds getting more pressure from their larger investors, from the more institutional investors, to have more female-founded companies and have more female investors and LPs in their funds. What they can do, it's a little complicated because of the number of investors you need to have, but I think they should let women in at a lower price point than the traditional 250, because a lot of women might be comfortable risking 25-50 in a fund, but not 250. It's too much. And so I think creating an easier access in, and that's the same for minority founders or minority investors. When you don't come from a world where you're being included in essentially the friends and family rounds, if you didn't go to the right school and you're not, at the golf course with the right people and you're not in the room, you're not being offered a lot of times the quality deals. So I don't think people necessarily go into something saying, I don't want to back a female founder. I think they say, I want to back someone I know. And the people that I know from Stanford were guys. And so I'm investing in the known entity. This woman is a stranger to me. So I think the more women can become actively integrated into the investor ecosystem, and I am seeing improvement there. So I go to a lot of conferences, family office conferences and LP events, and the women are always vastly outnumbered by the men in terms of who's actively investing. So I think that a big part of it is making women who do have resources more comfortable, understanding their options and deploying. I think there needs to be more syndicating amongst women to cobble together enough money to deploy into something, because I don't think we can rely on men to ever solve this problem. And I think that statistics are fascinating, especially people that say, somebody asked me about diligence earlier. If part of your diligence is relying on data and data analytics, and the data actually shows that female-founded companies are outperforming male-founded companies. It's in black and white. These are based on real numbers, real returns. So why any investor would not want to invest in the class of people that are showing to actually be more successful is insane to me. And I can only think that it is more of a who you know than about gender issue. I don't think people are like, I don't want to invest in someone black. I don't want to invest in a woman. I think it's, I want to invest in a known entity, and these people are known to me. Because otherwise you're basically like cold pitching, right? You're walking into a room, but nobody at that fund actually knows you. They didn't go to school with you. They haven't done deals with you. So I think a lot of times people invest in who they know. And so the only way to change that is to become who they know. Also, women need to be better. I'm speaking in huge generalities here, obviously. But women need to also be better in more aggressively asking for things. Women are known, again, this is just very stereotypical. This is not specific to each woman. But in general, if it comes to, like I say, a job application, and they say a certain criteria for that job, a man with 30% of the qualifications listed will apply for the job. The woman won't apply unless she has 95% to 100 of it. So part of that's changing the mindset too, of you don't have to be perfect to go into the room. You do have to have confidence. I mean, there are men who have done nothing but lose money on prior investments and still get funded again. And I have to believe that a lot of that's the bravado. It's a lot of that's the, you know, come to the club, come out to this thing, let's play poker together, whatever it is. It's the personal relationship building and bonding. I don't think women do as much of that. And so they're just not known. Joe, you have a comment?
Yes.
Oh gosh, yes. I mean, everything you said is correct. I mean, I'm doing a lot of research on this notion of why people write checks in startups. And there was a guy who wrote a piece. He was commenting, observing on Silicon Valley, but I think it's very much applicable across the country. And that is, it's bundled into what you gave examples, anecdotal examples of what is bundled into the label social capital. It's just absolutely dominates the decision-making process. It's who you know. I saw this 30 years ago when I was out there on Sand Hill Road, where I literally knew VCs that put money in a deal on a buddy was leading the round on, because that guy who was leading the round invested in this guy's charity. So he was spending LP money in a deal just to maintain the social capital, or he wanted to go up on the private jet that weekend to the Tahoe cabin because they didn't want to drive up to Tahoe from Silicon Valley. I mean, the amount of social capital, it is what dominates the decision-making process. This goes back to obviously what we're building. And your point is, there was a great point, and now this data is 4 or 5 years old, so I'll grant this point, but I heard the Kauffman Foundation had sponsored an impact conference in Denver, and the Kauffman guy did a presentation on the data on this topic, and he asked a question. He said, what percent of guys founding companies seeking capital got funding? And the statistic was 10%. So guy founded deals, chasing money, got money, 10%. He says, okay, what percent of female founded companies chasing money got funding? Any guesses? It was 10%. So that statistic is true, 2 point whatever percent. Doesn't matter, 2.3, 2 point, doesn't matter. We know that number is true. We'll accept that as fact. But where's the bias? If both of the numbers of companies seeking funding got roughly the same percent. Where's the bias? It's a statistical number. The issue is there's not enough females founding companies. And to your point, they're not asking for as much money when they do. It's both of those is what defines that statistical number. And so now the numbers I know, there's a lot more females founding companies. There's no doubt about that's going up. Also, given how much money has funded late stage deals, the last few years, most of the venture money went to late stage deals, right? So that's, you got the law of large numbers, it just really skewed things. And those later stage deals were largely founded by dudes. So, and that's where the money went. And again, we saw this with FTX is just the poster child for bad behavior of social capital and bad decision-making processes. So all of that, everything you just said is true, because it's also, I've talked to a lot of female VCs, and much to some of your earlier comments is they don't want to just invest in fashion deals. We've got a relationship, we're in a process of working with a group because we've got some rock star female founders as clients of our firm. And they're one of them is part of this group. She's sort of one of the rock stars of this organization. I don't want to mention the name because it's, but they've got 30,000 members of female entrepreneurs. And they gave me the statistics of their membership. And they said 31% of the companies are female founded entrepreneurial ventures that are seeking outside capital. And the breakdown of those, like 60% of the businesses that are entrepreneurial seeking capital are fashion, right? Fashion companies. That's a big statistical pool to say, wait a second here, what sort of businesses are females founding to seek capital? So this is where, and to your point, women are better investors than men. Terence O'Dean is the expert in the field of gender based investing. Women are better risk managers. That's their instinctive nature. And as a result, they're better investors. And that's why in running companies, they're more risk averse. So they're more measured in their capital allocation. They run companies better. Those are all truths.
They're better stewards of other people's
stewards of assets, whether you're investing or managing a business. There's no doubt about that. But they're not risk takers. And that supports the issue of the number of females founding companies and the sort of businesses they're founding.
Well, I think those are valid points, but I think they're also getting back to the earlier social capital step. So to answer Rachel's question, I'm sorry, is it Rachel or Rachel? Rachel, right? Part of the issue is women are not getting in the room. They have the business. They don't have the access. They don't have the access to the people that have money. And particularly when you are coming from a community where your community are not accredited investors that can help you with your friends and family round. There are more men who can just get that step up off the ground initially, even to fund a business plan, even to get to the place where you can even pitch an angel group. That initial friends and family $5,000, $10,000 pocket, some of them will never get to. And so they have great ideas, but they have no access to get there. So for me, one of the things I evangelize about is your JP Morgans and all the companies that are out there bragging nonstop about how much they're allocating to these communities. Oh, we have this huge pile of money we're allocating. Well, yeah, you're allocating to a successful fund manager with a track record who happens to be Black. You know, giving Vista more money is not allocating to the community.
That's right.
So if you really want to move the needle, if you're a JP Morgan, to me, you should invest small, tiny pockets of money, $10,000, $15,000 checks for the idea stage. If you see a good idea, there should be an application process for ideas, and give them enough money to create the plan. And then from there, you know, you invest, you don't invest, because obviously they're too early stage for those companies to ever invest in. But they should take some of that pool of money and give it to that friends and family range. Because if you come from a community or a background where your friends and family, your daddy wasn't a lawyer and your mom didn't run a big business, and your college friends are still paying off their loans, who's going to give you that money to initially start your plan? I was very fortunate with my business in that I started a service business. So I didn't have an initial capitalization that I needed to buy equipment, right? I didn't need to come up with money for a lease on a whatever. So I was cash flowing from the time I started. So I owned 100% of my company when I sold it, which is rare. But many businesses can't do that. So to me, funding that friends and family level before they're even at an investable stage is one way to solve it. Another, I'm in an organization that used to be called SheEO, which I loved, is now called Coralus, which I hate, but what a dumb name now. Anyway, but the organization is fantastic. And so any of you, if you're not familiar with them, it's venture philanthropy. So women like myself, or allies of women, will throw in a philanthropic check. You get a tax deduction for that check. That money is pooled together into a fund. We then open up applications for female founders with companies. I believe it's 50,000 in revenue up to $1 million is where they're sitting. And we go through their business plans. We go through the application. We narrow down. We vote on it collectively. Every woman that puts in a check gets a vote. And then the 5 top companies get $250,000, 0 interest loan. That can help move the needle. They're not giving up too much of their equity. They're giving up none of their equity. And they're not burdening themselves with debt, venture debt, which is very expensive, even if you can get it. So I think there need to be more organizations like that, right? Maybe people that can't invest, they can't do 25,000, they're not accredited investors, they can't go into private deals, but they have $5 grand and they should throw that in, get their tax deduction and start actively investing. And a lot of people are in a position to do that and they're not aware of it.
Well, there's a mechanism that's even better than that. And this is, I got to be careful because I'm pitching what we built, because I've been studying this space a long time. Because there are a lot of really worthy entrepreneurs that don't have access to what they need. To your point, whatever their profile is, it could be just as simple as it could be a white dude that lives in Iowa and doesn't come from a family with money, but, right? All the same things. And there's a tax incentive that's far better than opportunity zones and allows for even a better deduction than a charitable contribution. It's called qualified small business stock under section 1244. And what that law says is that if you are part of the first $1 million going into a startup and it fails, you actually get a better tax deduction than if you gave an equivalent amount to a charity. So there was a big hoo-ha over all the opportunity zone tax incentives a few years ago, and opportunity zone funds were formed. And that was just a boondoggle giveaway to the real estate industry. The spirit of it was sold as underfunded communities, both geographic, but also profile. But it was really bad legislation. And it was a better model is a QSBS fund. And you could carve out a portion of that QSBS fund that allows for non-accredited. It's Title III. Up to 25% could be Title III investors, so you don't have to be accredited. But this is a way to deploy capital, have investors literally invest, and know that even for those startups that fails, it's a better financial decision than giving it to a charity.
I wish I had known about that, because my write-offs, when I lose 25 grand, I get to write off like $4,000 of that.
And that's exactly, this is the part of the flaws in the venture model, is that they've never promoted this. I did a presentation on this to the Angel Capital Association 20 years ago on these tax laws. It went in one ear and out the other. Also, the director of the Kauffman Foundation, it went in one ear and out the other. So there are mechanisms out there, and there are ways to do this that actually blends prudent investing and also that benevolent intentionality, that you can combine both. Because the other QSBS law says in any startups that I invested in that succeeded, I don't pay any taxes on the first $10 million of profits per investor.
Well, we should talk offline about this because I find this fascinating.
There should be QSBS funds out there with just a geographic profile, or you can pick a thin slice it. Female entrepreneurs, African American, you pick the underserved community. That money would flow. But this is a knowledge issue. That's also, this is my critique of the venture industry, but also even those other well-intended organizations that have dropped the ball on this. Because I was, like I said, I've been pounding this table for over 20 years. This is a massive opportunity, because if you pool people's money versus having people try and make individual transactional decisions, pool their money and let people have a standardized way, an objective standardized way to apply for those dollars, much like a grant application, except it's an investment application. You got to start exercising those muscles. This is not charity. These are investors, but the benevolent capital can be treated properly for investing better in structure, pooled versus transactional, and also better in their intentionality. So there are absolute mechanisms out there for this and paths to do it very easily. I've got a number of white papers on it. Anyway, I go on for hours. I'm not trying to take over this conversation, but you're absolutely right. This is something I've cared about a really long time because I've witnessed really quality entrepreneurs that don't fit whatever mold that the social capital requires for money to flow easily. It's bullshit. Absolute horseshit.
I agree. And I think this is a really brilliant idea that I'm not aware of. So I'm learning something on this call. See, Bonnie, I'm learning something really interesting and new that I wasn't aware of. I know the OZ thing very well. But that's fascinating. Another thing not everybody knows about that's a founder is that you can actually go to donor advised funds, which are charitable vehicles, for investment, because through certain DAFs, a donor is able to actually invest in a for-profit company. The difference is the profits that are made, if there are any, go directly to the charity, not to the investor, but it's a way for, not to the donor, but it's a way for a donor that was going to say, give $25,000 to American Cancer Society to instead invest $25,000 in a founder, and then hopefully be able to give, $125,000 to American Cancer Society. The investment does well.
Those are called mission-related investing. It's another opportunity I've written white papers about. That's exactly right.
But not every founder knows about it, is my point. So I think that's another area.
There's a massive knowledge gap about this, and that this is, like I said, it's an information gap. And then also this issue of social capital is the problem. Without a doubt, it is the barrier for better investment decisions, so we can have a more elegant supporting of entrepreneurial capitalism. Without a doubt.
Before we run out of time, I want to give Ghislaine a chance to introduce himself because he was muted before. And I'm sorry to interrupt your conversation with this, but go ahead.
Thank you very much. I'm Ghislaine. I own a trucking company in entertainment based out of Montreal, Canada. I've known Lisa for many years. We're in the same industry. It's very nice to see you. Amazing presentation. Joe, I want you on my team. Amazing ideas, a lot of good ideas. I'm a founder. I started my company about 35 years ago, but I'm a founder. This is for me the interesting questions. I'm on my way out. Now I'm looking for investors to help me slow down. And what I found out is there's a lot of good investors. There's a lot of money on the market, but most of the investors want you to double their money and stay on. And I said, listen, the key word is exit. And then I've got a lot of good people that could run the company, but have no money. How do you mix a good investor and talent together to continue the business for another 10, 15, 20 years, Lisa?
I think Joe is probably going to have more answers for you than I will on that, because I have not. And first of all, bonjour, my friend. I am so happy to see you. I haven't seen you in so long. When I heard the name, I'm like, that can't be him. And it is. So his company is absolutely fantastic, by the way. I know several people. In fact, I can introduce you, Ghislaine, to some of the general managers from Broadway that I work with that have actually found a way to transition their company, bumping up former staff into partnership. But I don't know specifically how they engineered it in terms of the finance to keep the money coming in, because I don't think those employees had enough money to invest in essentially becoming partners. So that, to me, I wish I had answers for you. I could probably find them out in my community, but I didn't do that. So when I got acquired, I just became a salaried employee of the new company. So I exited in the sense that I could leave at any time. Like, I can literally tomorrow say, I'm done running this travel business, sayonara. I don't, because I happen to love the company that acquired me, but I didn't have the succession issue because I wasn't trying to keep my company and as an owner and then pass it on, but have a way to get out. Joe, do you have any counsel?
I was going to ask.
What was the very specific question again? so I can answer it very directly. I mean, I was listening to Lisa's answer, but so I can answer.
The question is, when you have a niche, okay, what I do is trucking for entertainment. There's very few of us in North America. So a lot of people want to get into an entertainment business, but they don't understand it. So when you have a niche, a lot of people are interested by the market and the margin, but anybody who wants to buy it doesn't know how to do it. So they want you to stay on. I said, listen, I've been doing this 40 years. The reason I'm selling is I want out, or I could stay as an equity because it's a good business, but I don't want to run the day to day. And they're really put off by that. Then I've got some good employees, there's good people in the industry. Lisa will vouch for some of them, but those people were employed all their life. They don't have the capital or know how to raise the capital. So I'm working on it. I'm right in the middle of that. So I'm trying to mix the money and the people together to make the company, like I say, my baby, the company for another 10, 15 years. So how do you mix money and talent together so everybody's happy?
Well, there's a specific structure for this called an ESOP, Employee Stock Ownership Plan. And it's a way for you to transition out and for their ownership to transition in. Now, the main issue there, and there's organizations that build this, it's a wonderful structure. It almost is built for exactly what you just described. And it's got some real compelling tax benefits and all sorts of stuff, but they're called ESOPs, Employee Stock Ownership Plan. The biggest issue is you just got to, like any buyer, whether it's your collective employees buying it over time or whether it's an outside PE, if you want to step aside, who's your successor, right? If you're going to ease that over time, that's where you can really groom. And the employees, I manage money for the DuPont, 3 generations of DuPont clan, and I've studied their family wealth because they've kept it in the family for over 200 generations. And they literally almost had an ESOP plan instinctively in place but they were all DuPonts, basically. You come in, start at the bottom, and they'd have the DuPonts, they all have to go to MIT, get a chemical engineering degree, start at the bottom at the shop floor. And because they're all shareholders or family members, there was a Darwinian nature of which of the best of the DuPont cousins were going to rise to the top because they all had equity interests. So because they had shared ownership, they always wanted the best, most effective cousin to rise to the top. And so this ESOP sort of allows for that. If you start grooming it and they're all shareholders, now they're going to care who's running it. If they don't, their own ego may say, I deserve to run it. But if everybody's got a vote and they're all shareholders, they go, no, let's get the best person to run it, regardless of who's got the loudest voice, who's the most obnoxious person that bullies everybody else to say, I deserve to run it. No, screw that. When everybody's got a vote, and you're all employees, it's on who's the best person to run it? Who's the best person to replace you? So an ESOP is probably going to be your something worth looking into.
See, Joe knows all things.
Thank you, Joe. It's on the list.
And
it's
I've
on the
studied
list
this
now,
stuff
Joe.
a long time, folks. That's all. I'm a compulsive researcher.
Yes, he is.
It's on the list of things we're looking at. Thank you very much for the confirmation what we're looking at. Thank you.
So, I wanted to comment on something Lisa was talking about earlier, is that, women founders, they always undersell themselves. Whenever they're doing their ask, and I'm like, why is it such a low ask? Every question comes up every single time. And the answer is always the same. And you know what it is? Oh, I'm not going to take a salary. I don't need a salary. Well, you're the one who's going to be working on this basically 24/7. Comments, Lisa?
Well, again, I do think it depends on the stage, because I do think it can be off-putting to an investor if they think I'm investing in essentially paying for you to live.
Well, no, it's not.
Opposed to growing the business. But I agree that there needs to be an understanding of value. And if I'm not paid, I have to be doing something else to make income, which means
Right.
I'm not focusing on growing the business that you're investing in. So there has to be in their numbers a realistic line item. But nobody wants to invest in paying for other people's employees.
No, I understand that.
There's no exit there for them. So that's the fine line. But I think women also, again, with the lower risk profile and being better stewards of capital, they don't ask for the outlandish number.
Right.
But they're trying to be realistic in their valuations. They're trying to say, this is where I think my business can actually go. Whereas a lot of men will just like shoot for the sky and be like, yeah, I can get it, And there's got to be a balance in between. I don't think it's good to overvalue your company either. I do think it's actually, for me, when I speak to a founder, I want a realistic explanation of how they got to that number and what their plan is. But I do think women ask for what they need, not for what they want. Men ask for what they want.
And they overinflate that to be also.
Yes, but
absolutely.
if you ask only for the bare minimum of what you need, then it's like, okay, now I've gotten exactly what I need, but it's actually, I'm not flourishing because it's just, you know, it's like, you know, I need water to survive. It's like, okay, but you know what? Sometimes you need some champagne and some whiskey to actually enjoy running this company. So I think there's got to be a little bit of understanding from women that, of course, don't overinflate, but also don't ask for the bare minimum, because then you're going to have to go into another raise very quickly, because as you grow, that's not going to be sufficient a lot of the time. Again, it's so specific to what business you're in, so you can't really broadly talk about that, because again, if you're a business that's going to have to constantly keep reinvesting in inventory or reinvesting in other large cap items, you have to have more money, more runway than if you're the kind of business that's, you know, a SaaS, where once you've built it, it's the more you grow is not actually costing you a huge difference in money moving forward. So understanding what kind of business you have is going to make it easier for you to know what you realistically need to really have the room to grow. And I think a big problem that certainly early stage founder has, but I think anybody raising capital while growing a business, is how much time you have to spend on your cap raise as opposed to on the business itself. And if you're spending most of your time trying to raise money, you're not going to have the business that people want to invest in because you're not showing the growth. So it's another chicken egg issue.
Lisa, we got to talk. That's what we built, is to solve for that exact thing.
See, there you go, because Joe is really smart.
No, I've been at it a long time.
Right, so you recognize the gaps, but these are the things that happen. And this is the same for funds. I mean, I know some VC funds that, as everyone knows, that people have really pulled back on deploying. Everyone's been a little hesitant lately. And they say, you know, instead of really working with our portfolio companies right now, we're spending a lot of our time just trying to get our raise done. So it's not just the founders that struggle with this.
Yeah.
But I think, again, you have to allocate time appropriately. And Bonnie, when you were talking, you know, they say, I don't need a salary. Well, of course, that's ridiculous. You have to have some income to pay for yourself, or you can't be focusing on the business. But what you can't do is say, well, I'm the CEO, so I need to get $200,000 a year. Well, no, first be profitable. Then you can start talking about what you deserve to make. So there's a balance again. And you need to have realistic numbers of where the money should go to grow the fastest. I also think people need to be creative in how they get what they need done. People forget about things like barter. I know that you know, we're in a very high-tech world now, but when I was starting my company, I'm a trained massage therapist. I gave massages in exchange for legal work, so I didn't have to spend money on the legal work. Right? It was like, hey, you know, this is my billable hour, this is your billable hour, but do you really want this massage? Because an hour of your time is not really $500 of your life. So get the pay, especially for basic legal transactions, right? These are things that their paralegals can do. But why should I pay for it when I have a skill, when I have something that they want? So I think people need to also be creative and think, like, what else can I bring to the table for someone to get some of my expenses down? And it doesn't always have to be something that you pay for. You'd be surprised how many people that are skilled are willing to trade service and sweat equity for, you know, a reduction in fees and things like that. So that's another thing I think for an early stage founder to consider. What else do you have in your arsenal? You said, you know, you do graphic design. Okay, you know, your business might need some graphic work. Why should you pay for that? I'll do the graphic work for you. You do the legal work for me. Or you do the QuickBooks for me. You know, you do the basic accounting for me, bookkeeping, and I will help you with your graphics or your branding. So don't forget that a skill set can be as good as money. I'm done. I think we're at 11 o'clock. Are you guys
Yes,
happy?
that was fantastic. Thank you so much.
No, thank you. This was really fun. I had a great time.
I'm going to have you back. I know you're very busy, but we'll wait a few months. I'm going to have Joe back too. Thank you, everybody, for being here. We have these every 2 weeks, and in 2 weeks, we're going to have Trevor Barlow, who's going to talk about how to find grants and free money, which is very important, especially right now. So thank you, everybody, and we'll see you in 2 weeks.
Hi, thank you. Oh, so good. Bye.
Thank you. Bye.